We still expect higher S&P prices until early January. The Fed said today that they were going to start cutting interest rates next year. And that, of course, is potential justification for our intermediate term expectation for a rally until next April. Finally, it's become visible. However, where are we right now? If you look closely at the structure of what's happened, the rally is almost over that started in October 27th. We're in the last legs of that rally, and we expect it will top out in early January, somewhere between the 5th and possibly as late as the 12th of January. After which we should see a reasonably deep correction in January, almost the complete month of January, possibly even into February. Once that happens, then we have been saying, and we continue to say, we're going to see a very, very strong rally after that should take us up into April. Okay? So we're still bullish, but we had been saying also there's going to be a low on the 18th of December, and we still expect that the market after tomorrow, the 14th, should make a little bit of a high tomorrow, come down for a few days into the 18th to the 20th, and then go back up higher till the end of the year into the early part of January. Now, it's very important to realize that very often you've heard the expression, buy the rumor, sell the news. Well, now you should be selling the news because the truth is, at this point, the rally's almost done. They made the announcement just at the end of the thing, the end of this big move, and it's likely to start to correct. And we do expect a correction into next week, possibly all the way until Christmas before it's ready to go back up again. Now, the other things I wanted to point out are very interesting. First of all, this pattern is extremely similar, as we said before, to the year 2000, and you can see that in this picture. It's also extremely similar to 1952. And what's the connection between the two of them? Well, it turns out that Jupiter is in the sign of Aries in the year 2000, 24 years ago, and 6 occurrences back, 6 cycles of Jupiter back, turns out to be 71 years. And the same day of the year, the same exact pattern, and the market does go a bit higher, and then it starts to chop around, but it ultimately stayed up until April or May of next year. Okay. Also, price-wise, you can see in our matrix channels, which are extremely useful for understanding price support and resistance levels, you can see how there are numerous times where there are clusters of lines, which ultimately are resistance levels. And as soon as the market breaks above one of those clusters, it shoots to the next one. Or when it goes below one of those clusters, it shoots quickly to the next one. Just did that today. It got past the cluster 2 days ago, and tonight it's actually reaching the 4774 is the next level, the beginning of the next cluster. Also, if you look at the Elliott wave pattern since the October low, this finally looks like we're seeing a 5th wave, and the 5th wave probably is not completed. Indeed, it should rally if it's equal to the 1 wave or the 3 wave, which was even larger. We should go up above 4,800, possibly as high as 4,900 in that early January high, which would make everybody extremely bullish, and yet the first month and a half of 2024, market's probably going to come down. Which it's due. It's due. Even if it's bullish, it's due for a 2 wave, it's due for a corrective wave. However, don't get short thinking you could short it tomorrow and make a lot of money. You may get lucky for a week, but I do expect higher prices. And if it doesn't reach the 4870 area tomorrow, tonight it's at 4774, a little bit higher than the close at 315. But we're still seeing possibly another 100 S&P points before the January high. And at that point, it might be reasonably safe to take a short position for a month or so. All right. We also mentioned the 2-year cycle is up, and it's been repeating, and that the 1-year cycle is upside down. It's doing what it did last year backwards. And that also calls for a high late in the month, possibly as late as January 5th. Okay. Also, the decline is caused by the planet Mars. The correction that hasn't yet happened, which still will happen, is reliably happening every 98 weeks based upon the position of Mars. It's just it had to finish this 5th wave before it was ready to come back down, and it will come down in January, possibly fairly meaningfully.